Yo, what is up, guys? It's your boy Don't Trade with Zay, because in this case, you might fuck around and lose the bag, but I'm back again with another video. And in today's video, we're gonna be going over my one trade a day on gold. We ended up losing, and yeah, I'm gonna just go ahead and break it down for you guys. So we're gonna go ahead and start new and go back to 8 o'clock in the morning, New York Open. So bam, we're here. Start from the 15-minute time frame. And as you can see here, if we're looking at the higher time frame, I know I got a lot of drawings, we are moving bearish on gold. So what I could expect is, for price to come up so we can sell down. So once I got that out the way, I zoomed in inside the range and I see that the 15-minute was breaking to the upside. So I'm like, okay, cool. And then yeah, I'm gonna just fast forward it to 9 so we can start building this story. So let's go ahead. So okay, we break to the upside. It is around 9 o'clock now. So now I'm gonna hop down to the lower time frame. So now that we've established that the 15-minute inside the range is bullish and 5-minute is bullish as well, I can start to look for entries. The entries I can start to look for could be in here, and that's what I did in here. So I drew a Fibonacci from the low to the high, from the structure points, and I waited for price to come down and mitigate it. So I'm just patiently waiting, see it break a low, retrace a little bit up, and then we'll zoom in here. So now that price has mitigated in here, I'm watching the structure and I'm just waiting. Bam, I see a break, change of character to the upside, and then I kind of see a wick up. I'm still not doing anything yet, but I'm looking. I'm like, okay, this might be the opportunity where I'm looking to buy. And then bam, we get the breaking structure to the upside, giving me my indication that price wants to go higher. So after that, what I did is I drew my Fibonacci from that low down here to this high, and I'm just waiting for it to tap 0.5 in this case. And then I see price go up a little bit more, so I just drag my fib like that. And then I'm still drawing the structure, and I see it break up again, so I'm like, okay, I extended it. And now I'm just waiting for some type of liquidity, like these lows to get taken out so it can retrace back down into here so I can enter my trade. And as soon as it's at 0.5, I popped one contract. I seen it shoot up, so I was like, okay, if it comes back, I'm gonna go ahead and add more. So once it came back down, I added more, and my overall position was at like 50% of the Fibonacci. So this is my entry. My 1-to-1 is here, so I put a sell limit for 2 contracts up here. I'm risking 240, stop loss down here. We're good to go. So now that we are in this trade, full position, we're just waiting now to see if stop loss or TP gets hit. So we get close to TP. We came back down to entry, start respecting, giving some nice little wicks, and then this push up to the upside. And then the crazy part here is that we almost hit TP. So we're like basically a tick away from TP. And look what ends up happening. Ends up stopping us out. Alright, so what went wrong with this trade? So what went wrong with this trade probably could have been the entry. So to make it easier on yourself for you to hit these 1-to-1s, it is better for you to pop the entry 0.61 and better. So 0.61 and anything down here. Why? Because look at this. If I would have popped my entry at 0.61, then my 1-to-1 would have been hit right there. I would have brought my stop loss to break even. My other TP would be here, so I already made money. and then I would have got stopped out, you know, but I made money. So that's the good thing. And then let's say if you got 0.7 down here, let's see if it would have hit for a 1-to-1. Just want to see something. Nah, you wouldn't have hit that one because it was already coming down. But yeah, 0.61 is normally like my sweet spot, you know, 0.61. So that way it just makes it a little bit easier for me. And whenever price is doing its thing, it's typically doing it above my entry. So yeah. And then the other thing that was going on in the back of my head was this 15-minute fair value gap that was not filled just yet, didn't get tapped into. I was like, you know, it's a possibility that it could, you know, tap into this fair value gap, and it did. But what I was looking at is that this 15-minute demand and the structure going to the upside. So for my confluences, this trade was valid. It was just the entry could have been better for me to win. And then let's just see what ended up happening. So price ended up liquidating us out, tapping that fair value gap, and then it ends up going to our target. But yeah, that's just trading, man. That's just trading. You can't win them all. As long as you followed your plan, you did good. I followed my plan. What I could have did better, just got that 0.61 entry. I'm gonna keep that noted for next time. What I did good with was, you know, finding that trade and being patient for it. And the other good thing I did good was that I only took one trade today, and I risked good, only my 240. So yeah, we're a little bit in drawdown, but nothing crazy. I was at like 1200 in drawdown, brought that shit back up to break even, so I should be good, man. I just gotta keep it up. But yeah, guys, that is it for me. If you want to see more videos, give this video a like, comment what you want to see next, give me a subscribe, and yeah, guys, I'll see you in the next video.